Today when the market opened, I was really excited. I had calls on Bank of America and Citibank because I thought the financials would do well today. And well, earnings came up good, so I sold my Citigroup, C calls. And afterwards, right around 10 o'clock, the market started just to go into full dive mode. And right now, when it was closing, just let me check it. I think it was still in the red somehow. Yeah, probably still in the red. Anyways, so why did bank earnings beat estimate and yet bank stocks took a really bad beating today? Oh, look right there. It's down like 0.29%. Whether I'm on the Bloomberg website. So why? I spent most of my day, thinking about this, and after reading a couple articles and having some time to digest all the information, here's what I found out. Banks, they grow mainly on a few types of revenue. Firstly is by making more loans and charging more interest on those loans. Secondly is through their trading desks, where they act as a middleman to facilitate trades by big clients. And third is through mergers and acquisitions for investment bank. So, earnings came out well. However, loan growth was disappointing, and trading equities were up, but banks make more money out of bond trading than equity. So bond trading disappointed. Mergers and acquisition also not very much for the first quarter, as we see a lot of volatility up and down, the market all jittery. So there you have it. Despite strong earnings, the market seems to think that the overall economy has a few holes to it, and that's why they sold down these bank stocks for today. Now, personally, I think the sell-off was a bit excessive because you only gave the world economy like what, 3 months to, and you expect that much out of it. So personally, I think that I could wait another 3 to 6 more months and see really how all these things goes, especially with geopolitical risk. But there is cause for concern, especially if you're a short-term speculator like myself, that has a little bit of money on the side, trying to game the market, and it really hurt today. I think my options were down altogether some 23%. Yeah, but if the market is as volatile as ever, and they still react the same by Monday, it should go up. Should being the key word. But if anything happens between now and Monday that causes markets to be jittery, or some bad news on geopolitical risk, yeah, it could come down real hard. Anyways, if you're a long-term investor, this could be the greatest moment that for the past few years you never get to have, because we just have major correction, 8 to 10% off stocks, and now possibly another drop maybe. So if you have cash on the side, it's definitely a good time to come in and pick up some stocks on a discount. And if not, well, you could just stay on the side, and it doesn't really matter, because if you're investing for the long term, these short term fluctuations shouldn't really mean much. However, if you're a short term speculator like some of money I did, then yeah, this is a worry for concern, because where will the market go from now? That always remains the big question for us. So, well, I'll try to dive in deep on this topic and hopefully share what I know soon. Thanks for watching, guys.